Okay, let's start. Good afternoon, everyone. Thanks for all being here on this Thursday afternoon. What we've seen in the global markets have actually been very mixed so far, with a strong West coming from the US. And obviously, what we're seeing with a weaker Hong Kong in particular, not in just in terms of emerging market, but China in particular. So with that said, we always believe that there's a bull market somewhere. So without further introduction, we have Jason Mariposa, our senior macro analyst, to give you guys what we want to be doing going forward. So Jason, the floor is yours.
Okay. Hi guys. So so let's talk about the markets today. So I guess first of all, I think malakas pa rin global markets, although it's not everyone. Parang this time pili lang siya. Diba? So I don't know when it's gonna start the correction. Please don't ask me that. But what I can say is that trend is your friend. Diba? But what we're gonna do today is maybe point out, okay, ano yung pwede magpatigil sa rally ng global markets, especially the US markets. So we're going to be focusing on what I think is the biggest risks out there. Okay. So just to give some perspective. So if you look at global markets, a lot of them are up like 15 to 20% already year to date. But in this chart on the right, you'll see that it's been highly not synchronized. So there's a lot of dispersion. So like a lot of these markets are already up 20%. So to give some perspectives, like for example in the US, it only happens 23% na up yung market 20% for the year. Okay? And actually, if you take a look at all these years, yung years nag-up ng 20-30% yung market is coming from a down year. So sabihin yung previous year malaki yung down. Diba? But today we're having a back-to-back. So in 2020, the US markets were up like 16% and this year it's up 20%. So itong 20% is double the annualized returns of 11%. Diba? So the point, it's not normal that I think that a correction should be expected in the short term when I don't know. Diba? So last night the markets had an uptick already in short-term support. So let's see if that holds. Diba? Okay, so I guess what's behind this very strong performance? Diba? So if you look at earnings, it's actually been very strong. We've had a gigantic earnings recovery in the past 2 quarters. Diba? In fact, yung last quarter up 60% yung operating earnings per share. Diba? And this beat expectation. See, if you look at this earnings division index, so a lot of people have been upgrading their earnings estimates for the US market. So that's what's behind the very strong rally. Diba? That's also a reason why we don't see a big correction. So earnings growth, I think, is going to stay strong. Rates are going to probably will continue to stay low. So we're not expecting a big correction, maybe somewhere around 5 to 10%. Okay, biggest risk. Okay, what's the biggest risk that we see in the markets? Actually, medyo marami. Like you have the Delta, you have a lot of people talking about slowdown again, and most recently yung China, yung Evergrande, tech crackdown, all those things. But for me, I think the most important we talk about is the spike in energy prices. Okay? Kasi like for example, if Delta gets out of control, edi gagawin ng Fed, more liquidity in the markets. Diba? So I don't think that's too big of a concern. Pero ito, parang I think this is a different kind of beast. Diba? So let me explain. We can finish with this. This is from Ray Dalio. Diba? So ito yung sinasabi niya that okay, yeah, we all say that okay, it's easy to say that the Fed should tighten, and I think that they should. But what he's saying is that the market has become very sensitive to changes in interest rates. That any slight touching of those brakes has the effect of hurting markets. Parang naging super liquidity rate sensitive na yung global markets. So I think this is could create a lot of volatility.
Another question on Hong Kong, maybe on the tech crackdown and on what's happening on the Evergrande. So basically, like our thoughts on the Evergrande. I think Jason shared some input a while ago. We don't know like the magnitude and the size of that 300 billion US debt that they defaulted on, nor the impact on everywhere else. Some things we've heard about is that worst case scenario is that China would not allow anything, so they'll probably bail them out, and that you'll probably see a weaker yuan in the short term. So we're watching carefully the Evergrande situation. What's concerning me more is that if you look at share prices, it's ridiculously being sold off. Think of it this way. It's already down 70, 80%, and it's still falling 30, 40%. And that's what scares me, actually, Jason. Yeah. So if you look at it, it's already down 80% from $20 to five, diba? $5, $6. And then from $5, $6, it still falls another 70, 80%. And so I absolutely have no idea what's going to happen. But is it concerning to me? Is it? And we're watching it very carefully. I mean, just look at yesterday and look at Win Macau. There was also news yesterday about same thing what happened to Macau stocks. And these are, this is Win, right? And Win dropped 30% yesterday. And it's still falling even today, if you notice the share price. And that's why when I look at these stuff, I worry. These are the things that are keeping me on the, awake and watching. And that's the reason why like having that huge overnight position or having huge positions both in Hong Kong and the US overnight is very difficult for me at this stage. Whether it will cause a contagion, obviously, Jason answered a while ago. We don't know. We're watching it carefully. Philippines has been relatively strong, especially the issues that we like. It's also the reason why we've been limiting the number of stocks we've been adding also on the watch list. We've been very selective in the type of stocks that we've been adding. If you notice our gap and go, it's also the same story. We always tell you guys to focus on the leaders, not on the laggards, because I don't think this is the time to rotate. And I don't recommend people rotating to the laggards today.